Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over, obviously, everything you need to know about AMC stock today. But what could be coming next for AMC? As I explained in the last video, retail sales came in a lot lower than what Wall Street was expecting. So what happened today? Every one of your big tech names, Apple, Google, Microsoft, Nvidia, besides Tesla and Meta, they were all red today. Apple, just big red numbers on some of them. Google was down like 2.5% today. So what you've been seeing this where, let's establish first up, money is not coming into our markets. Like 2021, everything did well because money was just getting plowed into stocks. What else could you do? You couldn't invest in bonds. Corporate credit seemed risky at the time, right? Because a lot of people were like, hey, in 2022, 2023, when we don't have stimulus, a lot of these companies are going bankrupt. You remember what was going on during that time. So the only choice was to go out and buy equities, right? And well, I should say it wasn't necessarily that these companies were going to go bankrupt, but rates were so low. You would get paid like 4% on a zombie company's bonds. That don't even make sense when the stock's going up 100% a week, right? So a lot of money, long story short, was going into our markets. Nowadays, that's not happening. You're actually seeing outflows to our markets. There's $6.3 trillion in money market funds as we speak. There's a lot of dry powder on the sidelines. Eventually, when rates do go lower or the economic outlook looks more certain, money will come back into our markets again. It's not going to look like 2021. It'll be more in quality companies, but it'll be more broad-based. Why do you think we haven't had a broadening out of our markets yet? Well, the money has actually been getting sold from your lower quadrants. I'm calling them quadrants, right? Your higher end quadrant is like your big tech names, your Magnificent Seven, your highest quality names, your bulletproof companies. Your mid quadrant is kind of not bulletproof companies, but that's like a PayPal. That's like a Trade Desk. That's like a Roku. That's a, Palantir, if you will. Good companies, but not bulletproof companies. Not, $1 trillion+ companies. Mid quadrant, your lower end quadrant is like an AMC, Fubo, more speculative, higher risk, higher return kind of names. Okay. Well, money has been sucked out of your lower and mid quadrants and pushed into your higher end quadrant. So your higher end quadrant, Magnificent Seven, is up over 70% in the past year. Your mid quadrant, let's call it your S&P 500, is up about 5% over the past year. Your lower end quadrant, like the Russell 2000, is up about 4%. Your equal weight S&P is up about 4% as well. And that's before today. So, maybe the numbers look a little bit different. That data was from yesterday. Nonetheless, the point is the same. We don't have inflows into our markets, and the money is getting pushed, or stocks are getting sold on your mid and lower quadrants and pushed into your higher end quadrants. What's happening today? Retail sales came in a little bit lighter. Markets are like, hey, the Fed doesn't need to wait as long to start cutting rates. Markets like to price in things about 3 months before they happen at the latest, right? So if we're expecting the first rate cut in the next 3 months or so, then the markets are going to start pricing that in, especially if we get data that reaffirms that theory. That's what happened today. So what happened? Big tech got sold. Other stocks did well. Look at CRISPR. Last I checked was up like 10% today. That's one of my larger holdings now because I was buying the stock in the 50s and the 60s, and now it's almost $90 per share, right? A lot of stocks like that have started to do better because of this selling you have seen in big tech today. And I think that selling could continue. And I think it's going to get a lot worse from here. Now, that does not mean your broader indexes need to or will fall. Keep that in mind. If you take a look at the broader indexes today, S&P is basically flat. The Nasdaq's sure slightly in the red because of those big tech names having such a high weighting. Nasdaq's down about 0.39%. S&P is up 0.04%. The Russell's, though, is up 1.13%. I mean, the Russell is having a fantastic day today. Whereas, your S&P and your NASDAQ are not doing too much. NASDAQ's actually in the red. So Ultimately, money leaving big tech names, the higher quadrants, will be good for the lower quadrants, is essentially long story short. Now, NVIDIA earnings, let's be honest here, the expectations are so high, it does not matter what NVIDIA says. NVIDIA is going to fall after earnings. That is almost a definitive. Almost. Now, that's not a recommendation. That's not financial advice. If you think that is, well, you're going to have to, do some more learning in markets, because even if I say Nvidia is going to fall and you're like, hey, let's go YOLO everything into puts on Nvidia, that's not what I'm saying. Nvidia is not going to collapse. Nvidia is just going to fall maybe 10 to 20%, and it might take a month or two. So it's not like an instant kind of get rich quick kind of thing that I'm saying here. There is obviously a lot of risk, and you will lose money if you take anything I say further than a grain of salt, okay? But it looks almost obvious NVIDIA is going to fall. NVIDIA is also being hit by the law of large numbers. And you'll hear more people talk about this, where NVIDIA was growing so fast over the last 12 months, people are expecting that growth is going to continue at that pace. And it's just not, because NVIDIA's numbers are getting so large now, right? It's easy to grow when you're at $7 billion of revenue in a quarter. Now you're at 20 billion. Right? Going from 7 billion to 20 billion is like a 300% increase year over year. Going from 20 billion to 25 billion, which is likely what they're going to guide for now, or even if NVIDIA goes from 20 to 30 billion, is like a 33% increase. So the law of large numbers is going to start working against NVIDIA. Now, a lot of money in particular has went from the lower quadrants into NVIDIA. Directly into NVIDIA, or AI kind of hypey names, SMCI included in that. Now, SMCI has a lower market cap than NVIDIA. SMCI's market cap is like 45 billion. NVIDIA's is 1.8 trillion. So a little bit different kind of playing fields here. But other AI names as well qualify, like a Microsoft. Some people think $1 trillion of Microsoft's value is related to AI alone. It's AI endeavors, which is insane. Now, if you look at NVIDIA itself, NVIDIA is very, very overbought still. If you look at the RSI on NVIDIA is 78. So it's not as overbought as it was, let's say, yesterday when the RSI was 84. If you look at something like an SMCI has the most overbought RSI I have literally ever seen before, at 96.3, which that one, when it implodes, it's going to be off the chain, ridiculous. Lots of people are going to lose a lot of money. And that's basically the warning that I'm going to sit here and tell you. SMCI, NVIDIA, these other chip names that have done very well, when these implode, they're obviously not going to zero, right? But it could take years for SMCI and NVIDIA to get back to the prices they are at today. Say tomorrow they implode. They fall 30%, theoretically. And continue lower. Let's say SMCI ultimately falls back into the 400s. It could take many years before SMCI gets back to 1,000. Almost where it was today. Same with NVIDIA. Let's say NVIDIA falls, 20, 30% after earnings. People are like, hey, the growth is slowing down. You get a little bit of a growth scare in there. Let's say NVIDIA does fall back to, the 500s. It could take years before NVIDIA gets back to 700. It could. That's very possible. And I think with some stocks it's more likely than others, like SMCI. I think it's going to take years to get back to, $1,000 per share once this thing ultimately implodes. And I think that's a risk nobody is considering if you're in these stocks. Great companies, but highly, highly valued with very large expectations. So that's my piece on that. I just wanted to, make it very known. I'm not a fan of speculating or gambling in these stocks right now. If you want to gamble, there is much better, places to do so. Gamble in a Fubo, gamble in a PayPal, gamble in a Tesla. Those make sense to me right now. Gambling in SMCI or NVIDIA right now does not make any sense. And I'm not talking about options when I'm talking about gambling. I mean just buying the stock, right? And that's not financial advice either. Fubo, PayPal, Tesla, they could all go bankrupt, right? Who knows when it comes down to it? Unlikely, in my personal opinion, but you will lose money if you listen to anything I say as financial advice, because unfortunately, it's not, and I am not a financial advisor. Even if I was, I would not give you personalized financial advice. Now, tomorrow, you are going to get building permits, preliminary numbers for January. Think here, more permits, more housing, good news for markets, good news for housing inflation. Expecting this number to come in at about 1.509 million. Last month's number was 1.493 million. Now, PPI month over month is expected to come in at positive 0.1%. Last month was negative 0.1%. Now, the Red Sea situation, does this start to make its way into PPI, producer price index, producer price inflation? In other words, are companies starting to feel the pressure from the shipping cost increase? I think that's the biggest question that I personally have. And given CPI just came in hotter than expected, if that's being fueled by PPI, that's especially not good. But if PPI comes in negative again, that will be great news for your lower quadrants of our markets. You're going to get PPI excluding food, energy, and trade, year over year, month over month, core PPI year over year, headline, housing starts month over month, all kinds of different data in relation to that. So keep that in mind. Now, you will also get at 10 o'clock in the morning tomorrow the Michigan Consumer Sentiment Survey. You're expecting a headline number of 80. Last month, you had 79. But it's really the inflation expectations that are so important, and your consumer expectations. So 5-year inflation expectations last month came in at 2.9%. You're expecting another 2.9% number. Michigan current conditions or consumer expectations are expected at 76.5. Last month was 77.1. So generally speaking, the higher the better there. Michigan current conditions are expected to rise from 81.9 to 82. And your 1 year ahead inflation expectations are expected to fall from 2.9% last month to 2.8% this month. And these expectations have fallen a lot. So if you see a jump in inflation expectations, that would be bad. And I would expect markets will likely sell off on that. Okay, that's just not going to be good at all. Now, tomorrow at about 9 o'clock in the morning, you are going to get Fed Barr that will speak. He talks more banking regulation than anything else, so I'm not expecting much there. Fed Daily, she will be speaking at about noon, so that could definitely affect your markets considering the data comes out in the morning. She's going to be talking about the data. There's going to be a lot of questions in regards to the data, and that will definitely move our markets. But again, I want to make this point. NVIDIA, Supermicro computers. When these AI stocks sell off, I think based on NVIDIA's earnings, not that they're going to be bad, I think NVIDIA is going to give you another blowout earnings, another blowout guidance to a certain extent, right? The percentage of the guide is going to get smaller. And I do think markets are going to say, hey, maybe the demand's starting to slow down. We just got news as well recently that you're starting to see more openings to actually get your hands on some of these H100, H200 GPUs and your A100 GPUs that are like your $35,000 GPUs that, you're starting to see other people able to buy them, which means maybe they're seeing less demand or they're seeing more capacity to manufacture them, right? So that could have been a good sign of potentially bad news to come. Who knows? But I am expecting good numbers. I think betting against NVIDIA fundamentally, on their earnings numbers doesn't make a lot of sense. But the stock is priced for very good news. Even if we get good news like we got last quarter with NVIDIA, it's probably going to be not enough to keep the stock going higher. Now, percent of stocks today at about percent of stocks above 50-day moving averages today at 56%. So that is up about 9% today. That is fantastic news. Overall, AMC's sentiment is neutral at 51. Message volume is high at 59. And the participation ratio is at 54. This is a lot better than where it was. More people are starting to talk about AMC. a brief run through of the Ortex data as well. Let's see what we're working with here. So for AMC stock, you do have 12.11% short interest of free float, $145 million worth of short positions, days to cover 1.77, 30.34 million shares that are currently sold short, shares out on loan 31.94 million, cost to borrow 1.03%, utilization of 48.5%, and a short score of 63.64 out of 100. So all looks pretty good there. For whatever reason, we don't have any institutional or hedge fund option trades that are coming up here, which I do find pretty strange considering Thursday is usually a pretty busy day for hedge fund institutional option activity. But nonetheless, if we do see the data coming out tomorrow that is really good or really bad, you can have an outsized effect in markets tomorrow, or outsized reaction in markets tomorrow. Considering AMC stock has about 26,419 calls in the money and about 80,000 calls out the money. Potentially, if that's an upside move, you could get some more steam to the upside. In the money puts at 10,588, out the money puts at about 30,000. So definitely some dry powder on both sides here, not just one side, but both sides here. Now, at the time you guys are watching this video, we will be getting some earnings coming out as well with DraftKings, Coinbase, Roku, The Trade Desk, Applied Materials, DoorDash, Agnico, Eagle, Toast, Open Door, and Hannon Armstrong. And then tomorrow morning, Air Canada, Cinmark, Treehouse, Liberty Broadband, some other names will be reporting earnings. But overall, today and after hours, those are your bigger companies, and arguably the biggest companies of the whole week that will report earnings. And it could be a mixed bag. I'm actually expecting a mixed bag from some of these earnings. So we'll see how the markets do ultimately take that information. But that is pretty much it. Let's see if we do have a new GDP estimate from the Atlanta Fed GDP Now tracker. We do not, actually. It's still not updated at 3.4%. You guys can go look for yourselves anytime you want. Atlanta Fed GDP Now tracker. And hopefully there's a new estimate for you. But for whatever reason, I do not have a new estimate coming up for me. If you look at 10-year Treasury yields today, they did fall a lot more in the beginning of the trading session. They're starting to give it back. So now 10-year Treasury yields are only down about 2 basis points, a little bit less than 2 basis points. So we'll see what ultimately happens with that one. 10 and 2-year yield curve inversion is only inverted 29 basis points now. Still not doing a whole lot on a day-by-day basis. But once we get closer to the first Fed rate cut, that's when you could actually see the yield curve uninvert, and when maybe some more recession fears do start to fly in our market. So hit that like button as well as subscribe to the channel. Let me know what you think about all of this information down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.